Hello, FX Edgers. This is Marcello Ducille with www.thefxpert.com here to bring you a IBO trade that I actually called uh, that took place on 1/29 of this year, so January 29th, 2010. Uh, this is the trade. I'm going to highlight it, show you how we took it and why we took it. Essentially, the pound dollar IBO on the daily chart has done exceptionally well. I'll go ahead and show you what I mean. This trade obviously is an IBO. Wherever you see the indicator, that's an IBO. This trade was good for 269 pips, profited. This trade was good for 144 pips, took profit very quickly. Um, all these trades actually profited, which gave us a tremendous opportunity to make considerable profits here. This one's actually kind of big, but we actually did a stop and reverse and had plenty of room to make plenty of profits. Um, Here we've got another stop and reverse that profited substantially here. That was good for, had a maximum favorable excursion of almost 1,000 pips. Okay. So, the IBO has actually done quite well in the pound dollar. Now we're going back into 2008. So whenever we have one, we try to take advantage of it. So we had an IBO coming up here. I'll just go ahead and show you a couple more. This is November of 2009. 178 pips. It was good for 204 pips. This one is stop and reverse and was also good. Profited here as well. Let's move this out of the way so you can see. It's good for 180 pips. Okay. Maximum favorable excursion of 223 pips. Here we've got another IBO, another stop and reverse. So guys, use your stop and reverses on this particular currency pair. I always do. Maximum favorable excursion of 366 pips. Okay, with 170 pips of risk there. We have another one here that actually was another stop and reverse. Okay, and that trade was actually good for maximum favorable excursion of 236 pips. Okay, if you want to kind of get a better feel for it, please go through your user's manual if you're an FX edger or if you're FX edge hybrider. Um, Here we've got another opportunity, and this is the one that I called. This trade was actually taken on January 29th of 2010. Basically, we got in at the break of the low here, and our high was at about 200 pips. Our stop loss was about 200 pips away. 202 pips if I remember correctly. All right. Basically, what we did is we put our stop loss up here at about 1.6274. Our entry is actually at 1.6076. 6075 actually, and our take profit is going to be at 1.5870, right around there. Okay, so basically we take profit on the second candle into this trade. So we enter here, bam, and we exit on this reversal candle. Okay, so what happens to our second position? So we make 202 pips on the first position. We move the second position to break even. All right, so we're at break even. Then what we do is, let me go ahead and get rid of this. What we do here is that we we have a trailing stop of 3 bars is what we did. Now, sometimes we use a trailing stop of 1 bar, which is just fine. If you use a trailing stop of 1 bar, you would have been stopped out here, and on that second position, you would have made just about 100 pips. Okay, we used a 3-bar trailing stop here. And what happened is that, I'm going to get rid of this now, is that what that means essentially is that if you're in a sell, you're looking for the highest of the last 3 bars, whichever highest of the last 3 bars that gives you a better position, that betters your position, you will move your stop to that level. So I'll show you what that means essentially. Okay, so here we've got our trade. We're in at 1.6075. All right, and now we're at break even. Okay, this came very close to hitting our break even point. It did not hit our break even. It was about 2 or 3 pips away from our break even point. Thereafter, it we've got 1, 2, 3 bars. Okay, so every time you close a bar, we include that bar in our assessment of the highest of the last 3 bars. Okay, so here we got 1, 2, 3 bars. So when this bar closes and this one opens, we move it down just 3 pips. Doesn't seem like a lot now, but it will add up. Now, when this next bar closes here, we count the 3 bars, and it's still the highest of those 3 bars. When this bar closes, we add that bar as well. 1, 2, 3. Now we actually get to move our stop down, and we've protected quite a bit of profit, 150 pips of profit. Now, when this bar closes, 1, 2, 3, we move our stop down again. Okay, and now we're in considerable profit. All right, we're in about 300 pips of profit. Okay, now when this bar closes, we're in 1, 2, 3, and this is where we currently are. So we actually move it down just a tad bit. So our stop should be at about 157. The high is 157.64. Our stop is going to be at 157.69. Okay, so right about 157.70 is where our stop loss is going to be currently. And we're currently in, what you've got is protected profit. Your protected profit is about 310 pips of profit. And our unrealized profit here grand total about 475 pips currently. Okay, so we made 475 pips on that particular trade. Now you're saying, okay, well, this is just one currency pair. Well, let's take a look at a couple others quickly. Make this one quick. Let's take a look at this pound yen. This pound yen's got opportunities. Here we've got a great pound yen trade. Gave us 130 pips of risk with a maximum favorable excursion of almost 1,000 pips. How would you like to make 10 to 1? Risk reward ratio. That's great. It happens. Currently, we have on the pound yen an opportunity on the daily. We have 3 inside bars currently. Okay, so if we have a breakout to the upside or downside, that there may be a trade there. I would also recommend using a stop and reverse there as well. But we haven't needed it as with this particular trade. Take a look at this. We made considerable profits here. I'm sorry. We made considerable profits here. Risked about 230 pips and maximum favorable excursion, of course, of 1,000 pips. You can play it however you'd like to. We can play it loose here, but following the rules, you'll do just fine. You'll make lots of money. Anyway, hopefully that's the plan anyway. So anyway, we've got a IBO here on the pound yen. If you look at the euro dollar as well, we seem to have one forming. Essentially, the buyers and the sellers are fighting here. There's a bunch of hesitation in the market. We are not making any progress in one direction or the other, and so we get these areas. The high and the low of the master candle become for us support and resistance. When we break out of that is when we have a potential trade. So that's what we have. We have the IBO daily chart highlighting the pound dollar principally. The trade that we just had made 202 pips on the first position. The second position is up 475 pips or so. We also have opportunities that are available to us on the pound yen and potentially on the euro dollar, because we've got to wait till this candle closes inside for it to be considered an IBO. This is Marcello Ducille signing off with www.thefxpert.com. Thank you.